Hello investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk to you about Magnite. So Magnite is quite interesting because we're going up into Q3 earnings next week, and we've just seen reports from Snap last week and Facebook last night. So it's quite interesting to see the dynamic of the privacy changes, how that's happening, what's impacting here. So we're going to go through that overarching theme. We're going to talk about its revenue growth rates of Magnite. We're going to talk about its profitability profile, and finally we're going to talk about its valuation. So I'm going to just jump right in. One of the things that's quite exciting to notice is that in the past 6 months the stock is down approximately 30%. So even though the company is doing performing quite well, you know, if the company is expected to do quite well and the stock is down, something's up, right? So what's been the worry here for investors has been how privacy impacts. The iOS change has impacted the whole advertising industry. So what we hear from Facebook and from Snap is that their ability to offer advertisers enough tools to measure the advert have been diminished. So Apple's tried their best to offer the advertising platforms a way to really measure those ads, but within each one of those platforms, within let's say Snap or Facebook, it's been kind of a bit difficult for them to measure, and advertisers have come one way, and they've had to in the past 10 years been measuring ads in one way, and now all of a sudden with the iOS change they're kind of measuring it in a different way. And I think this is going to impact also Magnite, but I also believe that this has already been factored into the price for a long time now. Remember, since 2021 this stock has been really underperforming, and it was a stock that I was quite bearish for some time, but when the facts change and the valuation is compelling, I'm happy to change my mind. And I know this jars with some people that, you know, you're supposed to be fully entrenched, never change your mind, but you know, when the facts change, I'm quite lucid with my facts, and I'm quite happy to change that. So it's the whole thing, right? I think this is going to affect the trade desk and every other company in the ad tech space. But I also think that, you know, the market has been quite alert to this fact, and I think this has been already priced in for quite some time. You can see, if you follow this whole space, you've seen for a while these Pubmatic, Tremor, the traders, everyone's been really affected by this. The only one that's kind of really appears to have done quite well in the last several months has been Digital Turbine, which is cool, you know. But anyway, so I just want to say that something that I wanted to put out there. So here's the thing, right? So Magnite is going into Q3 at approximately 90%, more than 90% really, year over year. But the reason is that they had that acquisition back in April of SpotX, and it had the previous acquisition too. So those two acquisitions stacked on top of each other has led to some inorganic growth. And as we go into next year, the big question: what is the growth rate going to be for Magnite? Now, Magnite declares, they had the investor day back in September. Magnite says we have what it takes to grow at more than 25% over the medium term. So they're saying to investors, okay, yeah, I know that they're saying basically the stock is down, but there is enough here in our business to grow forward at 25%. And one of the things that's worth highlighting is this green arrow that I put out there. Slightly more than a third of Magnite's revenues is coming from CTV. CTV is something that's very compelling right now. As you know, CTV is growing at a rapid rate. What's more, it's one of those things that hasn't been as affected by the iOS changes. So you got a segment that is worth approximately a third or slightly more and growing at a very rapid rate. That's something that's quite compelling for investors. The other thing that I want to highlight, you can see here in the screen, adjusted EBITDA. EBITDA has been progressing and expanding over time. So you got 2020, it was up 20%, and going into the end of 21, it's going to be a 32%. And Magnite says, okay, we have a lot of operating leverage in our business. Most of our operating expenses is personnel costs. So once you get over that and you grow the top line, we're going to be able to, over 22 into and beyond, we're going to be targeting 35 to 40% EBITDA margins. This is adjusted EBITDA margins. So you got a business that's growing at a rapid rate and fat margins. So that's very compelling, right? And the stock is priced at just, if you adjust, so one more thing. So the way that you can't really compare the trade desk with Magnite, because Magnite reports their revenues on a gross metric, so you kind of have to extract the traffic acquisition cost. So if you make it net to traffic acquisition cost, that kind of makes it more comparable with the trade desk. And you can say that the Magnite is priced at 8 times forward sales, whereas the trade desk priced at approximately 24 times forward sales. That doesn't necessarily mean that the trade desk is particularly expensive. You know, that's a different story, but I just wanted to highlight, okay, there appears to be that it's quite compelling. You got a business that's not particularly expensively priced, growing at a rapid rate, it has fat margins, and it's exposed to one of the most lucrative spaces, which is CTV. So altogether, I don't think that investors are kind of, I think investors are too gloomy here. But if you want to find out which stocks I'm particularly passionate about, so I highlight that actually I own Digital Turbine, I also own Tremor, so these are 2 stocks that I'm particularly bullish on right now, and I own. But if you want to find out what more stocks that I'm interested in, don't forget to check out my marketplace called Deep Value Returns. I help you become a better investor. I provide a framework, a process to help you think about building your portfolio and to compound it higher over time. Okay, with that aside, hope to see you throughout the earnings.